that Bitcoin whales are accumulating, taking Bitcoin off exchanges and sending them to their cold storage wallets. But before I do that, I want to look at this tweet by Eric Weiss. Maybe you guys aren't familiar with him, but Eric Weiss is actually the guy who orange-pilled Michael Saylor, got Michael Saylor into Bitcoin, and started his whole foray into the space, leading to MicroStrategy's accumulation strategy on Bitcoin. Anyway, Eric Weiss tweeted out, someone is buying $1 million of Bitcoin per second on Binance. Somebody is taking advantage of the zero fees on Binance for their 5th anniversary and starting to get aggressive with those market buys. Now, I uploaded a previous video on the largest Bitcoin whale, and I just want to follow up on that. So here's this is the public address of the largest Bitcoin whale. There are larger wallets, but they are typically exchange wallets, whether that be Binance or Coinbase or FTX. But if you separate for the separate out for exchanges, this is the largest Bitcoin wallet. It's larger than Michael Saylor. Michael Saylor has 129,000 Bitcoin. I believe this address is at 132,000 Bitcoin. And here's the public key. Anybody can look it up. You could even send Bitcoin to this address, although I don't think they really need it. But yeah, you can, it shows the different balances in Bitcoin, balances in USD, and it also shows the different transactions right here. So you can see, that there's been a steady accumulation, throughout the year, and even continuing in this massive downtrend we've seen in the last few months, where Bitcoin can't even get an up-close weekly candle. This wallet has been steadily accumulating. And just looking at the transaction structures here, this is totally speculation, but this does appear to be some type of entity, not an individual, just the way that the orders are structured and the transactions are structured. If you look at the sell orders, you have very classic blocked sell orders of 1,500 BTC or 3,000 BTC. If you scroll through the history, you got 3,000, 1,500, 1,500, 1,500, 1,500. Let's see, 1,500, 1,500, 1,500, 1,500, 3,000. But then the accumulation and the buy orders, which massively outweigh the sell orders. Excuse me, not orders, but just transfers. They don't follow that same format. They're all sorts of different values. And to me, what this signifies is that whatever entity or organization this is just putting whatever cash flow they have into Bitcoin, right? And that's why it's so irregular on the transfers into the wallet. And then the transfers out, I'm sure, it's some type of structured way to take profit, and it is in an orderly fashion and a structured flow for accounting purposes. Again, that's totally speculation. I think that's kind of getting in the weeds. What the important point is that this wallet is steadily accumulating. It's reaching all-time highs in its accumulation, and it's not distributing at all, even throughout this entire downturn. It's just been using this downturn as an opportunity to accumulate more Bitcoin. And Michael Saylor isn't far behind. He's at 129,000 BTC, and he's also been accumulating during the downtrend. Now let's dive into the on-chain data and sort of break this down. So here you can see Bitcoin whale 1 BTC, and again, the wallet we just looked at was 132,000 BTC, but for the purposes of this, they're classifying any wallet with greater than 1,000 Bitcoin as a whale. I'd have to agree with that. If you have 1,000 BTC, you're extremely rich. I think you could even qualify people much lower than that. But anyway, what this is showing you is it's showing the different net volume to and from exchanges. So you can see when the whales, somebody who has 1,000 or tens of thousands of Bitcoin, they're not going to keep that all on an exchange due to the counterparty risk. So they're typically keeping it in cold storage and only send to the exchange when they need to sell, because obviously you have to send to an exchange to sell. So you can see here where their inflows go into the exchange, and you can see, where they have their outflows. And essentially, what you can see here is you can see major outflows peaking from the exchange. So, essentially, what this is telling you is that, big whales are taking their Bitcoin off the exchanges and sending it to cold storage wallets. Again, when they're sending it to the exchange, it doesn't always represent, an absolute top on the market. Sometimes just exchange volume in aggregate is a better way to track it. But what this is telling you here is that, when you see a major dump and then whales start accumulating into the dump or after the dump, that's a good sign that there's more upside. You can see that. You saw that here as well, and this push up back above the all-time high, and you see that also coming in here at this area here, the retest of the previous all-time high. Now, if we go here, this is just the Bitcoin exchange net position change on all exchanges. So here, what you saw was, different exchange flows. So as the bull market in 2020 was heating up, you saw, Bitcoin being pulled off the exchanges, sent to cold storage. That reduces the supply in the market, reduces the sell pressure, and then you see a great move up. And then here, during the big sell-off in 2021, part of the Chinese mining ban right here, you see coins flow to the exchanges. Again, doesn't mark the absolute top, but does come in a period of drawdown, and leads to an acceleration of that drawdown, right? Just coming in right here, and the volatility picks up. Then you see coins leaving the exchanges as we get a rally in Bitcoin. And and then going over here, you see some accumulation here, but really what really contributed to the recent decline in Bitcoin on the weekly chart for the last few months is the blow up in the different funds. The Three Arrows Capital, well, first starting with the Luna collapse, right? And that was the spark that ignited the contagion. But you have all these different funds with somehow loans connected to the Luna ecosystem. And so when Luna blows up, well, first of all, they had 80,000 Bitcoin in reserve, which is pretty damn close to the largest Bitcoin whale, which is at 130,000, to put it in perspective. When they blew up, that 80,000 Bitcoin went straight to the exchanges and hit the exchanges all at once, which is really the largest market sell of Bitcoin that has ever occurred in history, like by far, by an extreme order of magnitude. So anyway, you see that spark that ignites it, and that's when you see this inflow, right? I would argue that this is like, people, different funds are sending their coins to the exchanges to add margin. Also, the Luna coins, LFG reserves are hitting their exchanges and others, and then you get the contagion, right? Then you get this further sell-off where all these people who have counterparty risk with one another, like Celsius, BlockFi, Three Arrows Capital, they start blowing up, and they have to sell Bitcoin to pay their debt obligations, and that's when you get this last move down. But as you get that last move down, the whales are accumulating into it, and you have now, at this point, a record outflow from exchanges. That's very important because it creates a supply shock scenario, right? There's just not a lot of supply in the market, objectively so. So, if we're at an area of peak fear and peak bearish sentiment, especially coming off a volatile move, when it does bottom out and when it does set in a low, it's gonna, as shorts cover and shorts are liquidated, you'll get that squeeze, and that's how bearish rallies generally are way more violent than even bullish rallies, which typically go up at a much easier pace. So moving on to different metric here. So this is the Bitcoin illiquid supply. Now, this is something I've talked about previously, and people may have lost faith in something like this because, obviously you see this divergence, right? I was talking about this divergence here between the all-time high in Bitcoin, and then you get the sell-off. And as you get the sell-off, the illiquid supply is rising. So that's a fundamental divergence, right? This is fundamentally bullish on Bitcoin, moving in opposite direction of price. And, that was one of the reasons why I was fundamentally bullish on, price to set in a low here and move upward. Ultimately, it didn't do that. The market kind of blew up and funds went insolvent. But what we see here is that as you get that protracted drawdown, the illiquid supply continues to increase. So the reason why that's significant is because the fundamental aspect of Bitcoin, of the supply constraint on Bitcoin has never been higher than it is now, even though price has gone down. So that's a key thing to keep in mind. A lot of people will see something like this and as, obviously doesn't play out, and then they go, okay, well, this doesn't matter. It's not relevant anymore. Well, it's still relevant. It's actually more relevant now than it's ever been. And it's just telling you that, that the supply constraint of Bitcoin is such that, if you do get short covering and a short squeeze, it can be extreme. Again, it's not a guarantee that it will happen, but the possibility is certainly there. And if you are managing risk, which is your primary job as a trader, you need to be aware of that possibility and manage risk accordingly. Now, the supply nature of Bitcoin is essentially the reason why Bitcoin has these face-ripping rallies, right? The reason why a lot of people are drawn into the market and have learned to love Bitcoin. Not exactly at this point in the market, but in times past, times like this in the market can make people forget just how hard Bitcoin can rally when it really gets going. And it's better to be on the right side of the market when that does happen. Anyway, it's just a fundamental thing to keep in mind. As you basically what is essentially coins are being taken off of the exchanges and sent to cold storage wallets. That's what we see in the whale accumulation. This is just the illiquid supply change, basically the same chart we were looking at previously, but it's showing you in with based off this linear model with the zero being the x-axis right here. You can see it in a different fashion. Essentially what you're seeing here is a peak amount of coins being sent off exchanges to cold storage. And again, just going back on what the liquid supply represents, is it represents coins that have been held in wallets for a long duration of time that have indicated no intent to distribute or sell. Basically, those coins are just sitting in the wallet and sitting there for large periods of time in cold storage. Really, that's the type of, to me, that indicates institutional involvement. A lot of these institutions that are getting involved, they have time horizons that are a lot different than you or I would have. A lot of us, we consider like a long time horizon to be like a year or two. But for a lot of these institutions, they have time horizons that are like 5 years, 10 years, even 15 years. And it's just a totally different perspective of the market. But they are the type of people who would, generally accumulate Bitcoin in this fashion and accumulate a huge amount and send it to cold storage. And just going back to this wallet of the largest Bitcoin whale, nobody knows who this is. Nobody has the identity of this wallet, but it's probably an entity. It may be a state actor or a large corporation. The fact that they have more Bitcoin than Michael Saylor makes me think that this is some type of government entity or a government entity, maybe a central bank, or even some company in the S&P 500, some entity of that scale. Again, just something pretty interesting in my opinion, but maybe one day we'll find out who this whale is. Maybe not. That's the beauty of Bitcoin. It's pseudonymous. If you know how to protect your identity. You never have to reveal it. Anyway, I hope you guys like this video. If you like this type of content, please make sure to just leave a like on the video, subscribe to the channel, and I'll catch you guys in the next upload.